Ladies and gentlemen, I am Toxicity, the liquidity sweep specialist. And in today's video, I'm going to show you the difference between the Asia session stop hunt and the daily stop hunt. So make sure you watch to the very end. Do not skip any parts because it's going to be super valuable to you and your Forex trading journey. Don't forget to subscribe and leave a comment below. Let's go. So on our chart right now, I have three indicators. These three indicators are, I have my Asia box. It's called kill zones, but it's an Asia session range. I've got my high-low day box and I've got my daily high-low. High-low day box and daily high-low. Three indicators for me to dissect my chart. So first of all, the difference between Asia stop hunt and the daily stop hunt. So this section right here, that's our Asia session, our Asia box. Let's zoom in properly so that we can see what's going on. Okay, so the first move during the London session is usually going to be the fake out. Okay, you have to understand that the highs of each day always have liquidity. Liquidity is basically people placing their stop losses. It is cash. It's where people place their stop losses. So we call that liquidity. Very easy to understand. The areas where there is a lot of liquidity are the highs and lows of each day and the highs and lows of the Asia session as well. So we have liquidity at this level right here, followed by the highs of these 2 days. So let's just say we are on this day. Let's remove this. The first move during the London session is usually the fake move. It usually takes out the highs and the lows of the Asia session or the daily highs in the previous day. Once again, the day highs are this high over here and this high over here. So if we just mark out the high of the Asia session, the price can decide to just stop hunt the Asia session alone or by itself like so, or the price can decide to actually go higher and grab all the liquidity that is resting above these highs and then go to the downside. Those are the two things that can happen. Now let's play the price and see what actually happened. The price first grabbed the liquidity of Asia, but that wasn't enough. It then came back and then did another stop hunt, but that was a double stop hunt of all these levels that are resting around here. That's what the price does. If you want to know exactly how to trade this, then join my Discord team. It's very valuable. Okay, let's proceed. So this move is grabbing liquidity from this level over here. And let's not forget the Asia session liquidity as well. So this is actually a daily stop hunt. And as you can see, look at how powerful it was. Sharp move to the upside, followed by a sharp move to the downside. So here we have another Asia session box right here. Now our daily high-low indicator marks out the previous day highs into the new day where we already are. So once again, the daily high-low box, the daily high-low indicator marks out previous day highs and the lows on our current day of trading. So how does that work out? You can see this is the previous day high, okay, and this is our day of trading. It marked it right there. This is the previous day low and it marked out the low with this line over here. So in the new day, whenever we don't have to be drawing anything, whenever the price opens and it goes beyond this level, we already know that that's a daily stop hunt, and we place our entries over here and the price goes to the upside. Simple, no complication, just simplicity and scaling the system. So let's remove all that. So what actually happened on this day? On this day, here is our Asia session low And all it did was grab the liquidity of the Asia low, and that was it. Once that happened, it just went to the upside. This was it. That's the move to the upside. So the price is not going to always grab the daily low or daily high or Asia low or Asia high. It can be either or. So you need to have your strategy set specifically for the right moves to happen, and you set your zones. If your zones get triggered, that's when you enter the price. You don't enter anything sporadically. Make sure you backtest this, and you will see that the price does do this on a day-to-day basis. If you have, so here I have practically all the charts, all the Forex pairs charts. If I just keep scrolling, next chart, next chart, next chart, next chart, eventually I'm going to find a trade that actually meets my criteria that I need in order to place my trade. Simple. All right, this is beautiful. Once again, we are on this day. This is our day of trading. This gray box is my Asia session. Okay. Above the Asia session, we'll have the Asia session liquidity, and we'll also have day session liquidity. This line right here is actually the high of the previous day, and this indicator puts the high of the previous day into the current day of trading. Do not forget that. Usually the first direction within the London session is not the actual direction where the price is going. So right here, the price goes to the upside. The whole purpose of the price going to the upside is to grab liquidity of the Asia session, grab the liquidity of the previous day high, and grab this day liquidity as well. Okay, so that was the purpose of that move, followed by a move all the way to the downside. Now, if you have the parameters to how to gauge this, and you have the right zones, order blocks, you have the right criteria, you can catch this kind of trades. It's quite simple. I go by the saying which goes, simplicity scales, complexity fails. So if you want to learn exactly how to trade this kind of moves, then click the link in the description section below. Like this video, subscribe to my channel. I've got way more information just like this, and I'll see you people in the next one. Take care.